These overnight queues impact our own markets. We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Sudarshan, let me come across to you first up. What is the market setup looking like today?
Morning, Sonal. So, well, we have many cues that market is expected to react to today. On domestic front, we have developments around Tata Group companies, and on global, we have cues of last 2 days that market is expected to factor in. So, let me first start with the US markets move in the last 2 sessions, Thursday and Friday. On Thursday, it was a good day of trade with all the indices posting gains of 1% each. But on Friday, all the gains were reversed, and the major reasons were: first, Nvidia saw a profit booking at close with a cut of more than 5%, and the second, better than expected jobs data for the month of February. But at the same time, unemployment rate came higher than expectations at 3.9%. So overall, cues are mixed from global markets. Shifting focus to domestic market, the pattern has almost been the same as US market. Last week, despite market hitting record high, it was a range-bound week, and that led to Nifty posting gains of 0.5%. And while for mid-cap index, it gave negative returns of 0.5%. But one sector which outperformed was Nifty Bank, and it posted gains of more than 1%. But on Thursday, banks saw minor profit booking, and support came to Nifty from other sectors like metals, auto, and FMCG. For today, keep an eye on Tata Group company because reports around listing of Tata Sons had led to a sharp surge in Tata companies, especially Tata Chemicals and Tata Investment. But what we understand from sources now that Tata Sons is looking at several other options to avoid listing in foreseeable future. On to institutional activities, we had buy figures from both FIs and DIs, largely due to block days. FIs bought shares of more than rupees 7,300 crore, and for DIs, it was more than rupees 2,600 crore. Lastly, some stocks towards SBI. Keep a focus on SBI because Supreme Court is going to hear the case related to electoral bonds.
Okay, all right. So that is the market setup for today. Let me go across to Vamakshi. She'll list out all the stocks that will be in focus today. Good morning, Vamakshi.
Well, good morning, Sonal. Let me first start off with Indigo. Sources are telling us that promoter Rakesh Gangwal has raised his stake sale from 3.3% earlier to 5.8%. He will be looking to raise nearly 6,581 crores, and this has been done at a stake. This will be done at a stake sale of almost 2,925 per share, which is the floor price, which comes in at a discount of nearly 6% to the current market price. Alembic Pharma is the next one in focus after the US FDA has issued Form 483 with 4 procedural observations for their oncology unit situated at Panilav. Other than that, keep an eye out on GM Financials. SEBI has barred GM Financial from acting as debt issue lead manager. It has also barred it from taking new mandate in debt public issues. Lastly, other than that, we'll also keeping an eye out on India Glycols. The company has added nearly 270 KLPD capacity to their existing biofuel ethanol plant at Kashipur, Uttarakhand, and now the capacity stands at almost 410 KLPD. Gujarat Gas will also be in focus. The company has signed an MOU with BPCL to collaborate on various fronts to streamline operations. Torrent Power will also be in focus because the company has received nearly 1,540 crore worth of letter of acceptance from the Maharashtra State Discom for 306 megawatts of solar supply. Dwarkesh Sugar has approved a buyback of nearly 1.6% stake at a price of 105 rupees per equity share. The aggregate consideration of this proposed buyback stands at almost 32 crores. And lastly, keep an eye out on Gensol Engineering. The stock will be in focus after the company has won Gujarat Urja Vikas Nigam Limited's 70 megawatt battery energy storage project, which is worth almost 450 crores.
Okay, all right. That's a long list, Vamakshi. Thank you so much for getting us up to speed with that one. Finally, let me go across to Nigel. He's joining with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. On Thursday's trading session, the mid and the small cap said enough has been said about us underperforming. Let's outperform. And that's why you had the small cap index that was a relative outperformer. Getting into this long weekend, there was some lightening of positions because both on the Nifty as well as the Nifty Bank, there was a big write-down in terms of open interest out there. What did the FIs do? Well, they lightened some positions, but they lightened more on the short side than on the long side, though they continue to remain net short with close to around 58% of their positions on the short side. There were 2 strikes that were very active, 22,500 call and 22,500 put. Now, that's known as a short straddle, where you write both those 2 strikes, you pocket the premium. And in Thursday's trading session, the total premium you would have pocketed is roughly around 300 rupees. So you're safe as long as, the Nifty stays in this range of around 22,200 to around 22,800. That's 300 rupees added to 22,500, 300 rupees deducted from 22,500. So that seems to be a strategy that's playing out. And I'll say the Nifty is pretty much in an uptrend. The 20 DMA could be a reference point on the downside, but till that 22,000 odd level is holding out, you'll have to bet that the Nifty is likely to move rather higher than lower. And the Nifty Bank holds the key because that's around 1.6, 1.7% away from its fresh now all-time highs. If the Nifty Bank can get closer to around, get to its fresh all-time highs, that's going to be the trigger for the Nifty to move up. So we're going to be starting gap up. You'll have to see whether or not we can build onto these gains. Back to you.
Okay, all right. Thank you guys for joining us and prepping us up for this trading day ahead.